In this video, we're going to go over how to use the trending band. So we're going to go over questions like what does each line do and mean? What's the best time frame or time chart that I should be on for this, and so much more. So please stay tuned. If you haven't, take out a little notepad because this may be useful. All right, guys. So whether you access the band through TradingView.com or TD Ameritrade, it should look like this. And TradingView at the moment, the yellow lines are not programmed into it, but it should be there very soon if you don't have access to it all already. So your band should look like this, right? So the middle again is the 200-day moving average, which you can't really see. And then the upper line is one standard deviation above, and then one standard deviation below is the red line. And then we have these yellow lines, which act as the uppermost bounds and the lowermost bounds, right? So I'm going to explain that a bit more here after I go through the times. All right. So this band is works best in following the trend. It is a trend following indicator and strategy. So you want to make sure the best time frame it works on is the daily time frame. So when you go to a time frame, the aggregation period will be 1 day, which means that each candle will represent 1 day. So it's a daily candlestick chart. And also you want to show a lot of history on the chart as well. So the time interval means how long it shows the history of the stock. So 2 years will show 2 years back, 3 years will show 3 years back, etc. I like to stick to 20 years, but you can also go max, just because I want to see what the history of the stock has done so that I can predict the future, right? But if you only want to do 2 years or 1 year, that works too. Now, if you're using this on a shorter term time frame because you want to day trade a bit more or do a shorter term swing trading, I have found the best charts are the 15-minute chart. So where each candle represents 15 minutes. All right, now let's get into what each line on the band means. All right, so I have a little drawing tool here, so help us understand a bit. It looks like it's going to be in yellow, but I want something that we can see, so let's go this little pink one. Okay, so as you can see here, this bottom yellow band acts as the bottommost level of support, right? So it can break below that level as we see here, right? It can break below it, but the way that this works is it has a tendency to go back up after it's crossed below the stock or below that threshold, right? So let me zoom in a bit more and show you what I mean here on two specific instances, right? So as we can see here, we have this example where we cross below this bottom line right here. And then when it breaks back above, this is our entry to buy, because that's when we are fully extended, we're oversold, and then we could actually get a good buy right here at this level. So that is how you use the bottommost line. Right, so as we can see here, and recently in the market, it came below this first yellow band, right, which is fine. But when it gets back above the yellow band, that is our time to buy. So if you go back to the weekly alerts, you'll notice that I was alerting that we start buying. That when I was like, okay, guys, it's a great time to buy stocks, that's because the market got above this band, and that's when I started saying, hey, it's time to buy. So that's how we can use it as a good time to buy during a stock market crash, or etc. Like we can even go back. This is why I like seeing the long-term history of the market. You can see here that in the 2008 and 2009 crash, we pushed below it, we broke up. We pushed below it, we pushed back up. We pushed below it, we pushed back up, right? So it's just the natural progression of how this movement works. Okay, now what does this second line mean? Okay, it's just showing which way the market is trending, right? That's why it's red. If it's below this line, the market is in a downtrend, which means the market is moving lower. So when the market crosses below this red line, we're going to be looking to go short, buy in some inverses, buy in VXX, which is the volatility index, and maybe go over to some short-term holds, right? So that is how we use the bottom band. Now inside these two bands here, let's see if I can get a good little here. Inside these two bands, let's see. There's a great example. I'm way past. It's known as a consolidation period. It's very range bound when it's in the middle here. So for example, as we can see, when it was inside this band, it's very risky because it can go up and down without cause, right? Because when it's below this, it's downtrending. When it's above this, it's uptrending. But when it's in the middle, it can do whatever it likes, which means it can shoot up and then go down. It can go down and then shoot up. So we cannot predict the direction of a stock when it is inside the band. This right here is a perfect example of that because we broke into it, then we broke above. And if you think to buy here because it's a bounce, it's not, because it's risky and it's inside the band and it just gets rejected. And it goes back down and bounces back up. It goes back down and bounces back up. That's why inside the band is not the time to invest. That is when we go to cash, right? So the time that we buy above this, well, let me clear it out here so it makes more sense. So we buy above the band because that's when it's in an uptrend, above the green band, and then it moves up. So when it goes above, the market enters an uptrend and we buy, because when you invest in something, you want that money you're investing to make more money. So why would we invest if the market is going down, right? We only invest when it's going up so that our money makes more money. And as it goes up and it starts to curve back down, when it enters here, typically we have our stop losses set here, but that's in another video in this section that you'll learn that. But you can see here that we exit, because we don't know what's going to happen inside here. We can think, okay, maybe there's a bounce, but indeed it actually fell through. So this is something you have to watch out for. When it is inside the band, just know it is the riskiest time to hold that stock because we don't know which way it's going to go. When it gets above the band, as I just discussed, we are in an uptrend, right? So when it gets above here, we invest because we can make that 5%. We invest here, we can make that 12%. Now, again, the way that works is if we use SSO, which is a 2 times leverage, we can actually make 10% here and 20-something% here. The same way that this bottom band works is the same way that this upmost band works, but there's something you have to pay attention to. All right, so the way that it works is we calculate everything on Thursday, right? That's when the weekly alerts come out. That's when everything is decided and we do our big stock research day, or at least I do the big stock research day for everyone. The reason why is because on Thursdays we can draw out a line. So for instance, this was a Thursday, right? Somewhere around here, we mark where the top band is, and that's gonna show us where our resistance is at, right? So this shows us where our upmost resistance is, and the best time to determine that is on Thursdays or Fridays. So that doesn't really matter. All you really need to know is that this will determine the top resistance. If you see the market getting close to this line, you should be expecting a sell-off, right? If we get close to this line, we see a sell-off, right? You can see here that we're not anywhere close to this top line, so it just continued trending like normal. Remember, guys, the natural progression of the market is slowly up, and when it moves slowly up, it does not get close to the band. Right, guys, so this was a brief explanation of the band and how it works. Well, more in-depth explanation. But if you want a more simple explanation, it is we buy above the green line and we sell below the red line, and in between is risky. All right, guys, I hope this made sense. If it doesn't, please reach out to me, but this should explain everything about the band, how it is a trend following system. We buy above the green, we sell when it's inside here, and we go short, which means we make money to the downside when it goes below the band. All right, guys, once again, I hope this made sense. If it doesn't, don't hesitate to reach out to me. I respond faster in Discord, but if you want to email me, you can as well at hello@theimpeccable investor.com.